Hi, welcome to this video day. It's Sunday, it's the 31st of January. In this video, we're going to be looking at trend following big trends. Catching those really big trends, 300 pips, 500 pips or more. Now, all traders want to catch and hold big trends, of course, but most fail. So I'm going to give some simple tips for beginners, which will help you catch and hold big trends. Now, in relation to big trends, I just want to give our updated outlook and analysis on three British pound pairs. Now, we've looked at them all in videos before. I'm just going to give my updated view. They are going to be GBP, AUD, Euro, GBP, and GBP, NZD. We'll go over and take a look at the charts in just a moment. But just before we do go and do the charts, please keep in mind it is obviously my view as of this moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, just click on the link which you'll find beneath this video, and you can get live access to our member center. You can also join our Facebook group of traders, follow us on Facebook, and also check out our Recommended Regulated ECN FX broker. Right, now we're going to go to the charts. In terms of the pair we're going to do first, it is going to be GBP AUD. GBP AUD, that's first of our £3 pairs. We've looked at them all before in videos. This one's the top performing one for us at the moment. We've got 347 pips in open profit, and I think we could get possibly 500 pips more. I'll go through the technicals and round up the fundamentals and sentiment behind the chart in a moment. But just before we look at the pound in detail, I just want to go through these points in relation to why retail traders, beginners, fail to catch and hold big trends. Now, in terms of most beginners, retail traders, they use price action trading strategies. They will not help you hold big trends. Why? Well, the reason is noise levels. Come to noise levels in a bit more detail in a moment. But it's confidence and stops that really come into play with price action traders. Now, what I mean by that is, let's say you get in to a trend, okay, and you get a bit of profit, then that profit starts to get bigger. Price action traders don't have the confidence to hold the trend because they don't know the big fundamentals and sentiment that are driving the chart. That is where the chart comes from, okay? So they'll probably snatch it early or move their stop up too close, get bumped out, and then the trend carries on the way they thought. There's no way around it. If you want to catch big trends, you need to look at big fundamentals and sentiment. A lot of traders think, oh, that's really complicated. No, it's not. It can be extremely simple. When I do my roundup of the fundamentals, sentiment at the moment, I'm doing nothing complicated. All successful traders use the fundamentals or look at the fundamentals and sentiment, and you should too. There's plenty of sources online where you can look up what people's views are and just decide if you agree with them. Okay. Now, in terms of another major mistake that traders make, they want to make effort. Okay, and by that I mean they want to always be looking at price action. Okay, that is a danger. If you look at price action too much, your emotions, your psychology will get involved, and you'll do things you shouldn't. So once a day is enough. You can update your stop and see if you want to hold the trade. That's it. What happens mostly within a day is noise. And if you got your stop in place, why are you looking at price action? You've got a profit target. What help is it to you? It isn't a help, it's a hindrance. If you look at price action too much, you'll fall foul, or is that the right word? You'll be impacted by what's called recency bias. Now, as soon as you look at price action in real time, your emotions get involved. You'll see, big moves in the short term that just basically are noise. But because you're seeing them in real time, you'll want to react, okay? And you'll be impacted by dopamine and testosterone, okay? Dopamine is the feel-good chemical in the brain. So let's say you've got trade in the market is going a little bit against you, but you got some profit, you're tempted to bank it out. Okay, it makes you feel good. I mean, everyone likes banking profits. You get a hit of dopamine, but you've got to keep in mind your profits have got to cover your losses. Okay, so if you bank out too soon, you're never going to make money longer term. You'll also have testosterone get involved, and I've written frequently on chemicals in the brain and steroid hormones getting involved in your trading. They do. Testosterone, as soon as you're watching price action, in real time, testosterone is kind of your competitive hormone. Okay, so let's say you see prices going against you a little bit, you might decide, right, I can get in at a better price, add another trade in. You're too heavy in terms of your position, or if it's going in your favor, again, you'll be tempted to add in, do a size that is too big. And when you've got big size, what do? Well, you can move your stop closer, aren't you? You can move your stop into the noise, and then you're probably going to get stopped out. Now, you need to manage noise levels, as I put here. You do get a lot of noise in trends. They're not one-way traffic, are they? So you're always going to get moves against you. You've got to manage those moves. So your technicals have got to take that into account, and you must avoid obvious stop levels. Most traders put their stop in an obvious place. Big institutions know that, push the price towards the stop, and they'll take you out. Then the trend will go back probably the way you thought. Okay, so there's just a few points to keep in mind in terms of holding those big trends. Now, in terms of the pound chart, let's go through the fundamentals and sentiment. Now, GBP most oversold major due to Brexit over the last few years. It is. Now that's concluded Brexit, isn't it? The trade deal's in place. Brexit is gone. The GBP will move up to correct that undervaluation. Okay. Now, in terms of GBP, UK, we know it's had a big hit on the economy due to COVID and the lockdowns that are in place. Okay. But the markets are forward looking. Okay. That's in the price. If you look at the UK, it's leading G7 nation in terms of vaccinations, is really vaccinating the population quickly. I would expect the UK economy to really firm up in the second quarter. Markets are forward looking. Okay, so I think at this moment in time that's going to happen. Bank of England, always keep your eye on central banks. A lot of people are saying, well, they're going to cut rates. They're not going to cut rates because inflation is rising. It's coming in above forecast. So Bank of England not cutting rates from the market, or many in the market were expecting them to do so. Bullish for the British pound. Other side of the pair, the AUD. GP most oversold major. AUD is the most overvalued, certainly since the middle of last year. It's been on a huge move to the upside, okay, after running from its March lows. Now, in terms of AUD wise, it's strong. It's strong because commodity prices have been strong. Markets looking for a V-shaped recovery in the global economy have bought commodities. But that's discounted now, this V-shaped global economy, recovery, which we do not think is going to happen. And we've looked at commodities, and they are just a bubble. Okay, particularly Australia's biggest export, which is iron ore. Iron ore is now going down. It's going to crash. It is a bubble. Other commodities are going to come down as well. That's going to put pressure on the Aussie. Final point, if we get a big move to risk off, and markets are looking a little bit nervous at the moment, financial markets generally, the GBP will do far better than the AUD. Okay, so let's review the chart. I just want to go through where we took the trade and where we see it now and the upside potential. Now, in terms of the chart, you see this big sell-off here. Two big reds, one big red and a follow-on red. Why? Because at the time, the market was seeing no trade deal being done between the EU and the UK. Well, that's in the price. We rally back. Then the rumour comes in again. We get two big candles. And we're thinking it's in the price, so the pound is probably going to rebound. So we want to come in, we did come in on this candle here, just through that level there. Okay, but then we move back down. That is a substantial move. It's about 180 pips. If you're watching that in real time, you're not going to stay with the trade probably. Okay, but we've got our stop in. We're prepared to wait. We come up, we exhaust again, but we finish a bit higher than the previous blue, so that's okay. Then we move up. Red there, it's about 100 odd pips in it on the downside. I don't want to be watching that all day. Up 200 pips. These candles can panic you, okay, if you're watching in real time. Then we move to the upside. Then another, what's that, about 180 pips down. We're still not panicked, okay, because the major levels have not been violated. And then we have a blue on Friday. So how do we see this chart now? My own view is this level here, it's a round number, 178. That is the key level on the downside. I think that is first level support. Okay, now, that's an obvious level, isn't it? You're basically almost in, sorry if I draw that across. Okay, I've skewed it slightly. You get the idea. This candle here, body up, body up. But yeah, we're well clear of that first level of support. So my stop isn't going to be behind here because we always come back. I want it back behind the round number, behind the 178 level. Just draw a trajectory in there. So first level here, second level here. So I've got to give it a little bit of room to breathe, haven't I? Giving it a couple hundred pips. But that's what you need to do. Now, in terms of, if you wanted to come into this position fresh, how would you do it? Well, you're blue positive here. You could buy back to this level, come off it on strength, or if we just have a little bit more strength in the new session, go long. Where are we going to go to? Well, our reading of the fundamentals and sentiment points to a move to 184, which is a big level on the longer term charts as well, and also a round number. Now, it will take a bit of time probably to get up there, but you've got 500 odd pips from where you are now. The risk reward on this pair, if you came in, let's say we open just around where we closed, about over 4 to 1 in terms of risk to reward. So that's GBP AUD. I'm just going to look very quickly at Euro GBP and GBP NZD. We'll do Euro GBP first. I'm just going to use the charts from our member centre. Euro GBP, you can see here when there's all that sort of debate over would there be a trade deal between the EU and the UK. Price action just very, very erratic, but prices top out and go down in a kind of smoother fashion, and we get in at 90.10. It's 88.52 now, so reasonable profit. Now, in terms of this trend, everything in terms of the fundamentals favours the UK over the EU longer term. I've talked about bearish Euro fundamentals in other videos recently, so you can go and look them up. Any rally is going to be a selling opportunity. Now, I've got this as first level resistance, 89, because when we came down here, we were trying to get back above it and then falling away. Stop behind second level, not near the 89 level. Okay, so well back from the level. If we go down through this low here, then basically I'll probably bring my stop a little bit tighter. But from a long-term perspective, this pair looks really, really good. I just want to show you the longer-term weekly chart. My own view is we should get down to 86 here. That's our reading of the fundamentals, obviously, and then down to 83. Okay, so potentially 500 pips more. This is obviously a long-term perspective, but if you want a long-term trend, I think selling the euro bounces or breaks lower is a really good trade. Okay, last pair, GBP NZD. NZD has got a similar profile in terms of fundamentals to the AUD, and both these trades together because they're very correlated. The AUD and the NZD, and I actually thought the GBP would go up quicker on the NZD, but it hasn't. Okay, we did have a trade in from here, went up, and we did get stopped out. 150 pips. I think we gave back about 150 or 120, something like that. So you have to be prepared to give back. But our view was that we would rise again, and we've come in at 190.16. See there, and we're at 190.56. I think now, basically through this level here, 191.30, we should be off to the upside. If we break out above that level, that become first level support. That'll be second. Okay, so again, just a 4-to-1 in terms of risk reward. NZD very overvalued, like the AUD. So there's 3 pairs and a few tips on holding big trends. Now, one thing I would say about big trends is, you are going to get stopped out a lot of the time. You're going to get stopped out probably more times than you come out with profits. I stopped out at a loss. So you're going to need, if you think about noise levels in pairs, 150 pips to stop, let's say, just as a rough average. You really want 250, 300 pips on your winning trades or more to be long-term profitable. Most beginners just don't understand that. They think that they're going to win a lot of trades or taking profits, even if they're small, they're good. It's not a great way to trade the markets. Right, I think that's it for today. It is it, sorry. Thank you for watching this video. Take care and have a good day.